Are you ready to uncover the real story behind a financial giant? Well, you're in the right place with today's video here at Luxo-Life, inside BlackRock, Controversies, Influence, and the Future of Finance. Forget the classic tales you know, with clear-cut heroes and villains, because today we're peeling back the layers of a story that's anything but ordinary. Welcome to the enigmatic world of BlackRock, a trillion-dollar behemoth straddling the line between a financial hero and a controversial titan. So buckle up and stay tuned as we unravel the complex, twisting narrative of BlackRock, a corporation like no other, where every new chapter defies expectations. Is it a force for good, a source of contention, or a bit of both? Make sure to watch till the end because you don't want to miss this. Right in the bustling heart of New York City, tucked away in a simple single room, 8 visionaries came together with a bold dream in 1988. Imagine the following: Larry Fink, Susan Wagner, Robert S. Capito, Barbara Novick, Hugh Frater, Ben Golub, Keith Anderson, and Ralph Schlosstein are set to establish BlackRock Incorporated, a financial behemoth amid the bustling metropolis of New York. Starting off with just a $5 million loan and a shared ambition, they began a quest to revolutionize asset management with a new twist, focusing heavily on risk management. The timing was impeccable, as the financial world was still reeling from the savings and loan crisis. The Federal Deposit Insurance Corporation, or FDIC, was desperately searching for answers, and that's where BlackRock stepped in. At the forefront of BlackRock was Larry Fink, a man whose vision and leadership were vital in propelling BlackRock to its status as a financial juggernaut. Born Lawrence Douglas Fink, better known as Larry, on November 2, 1952, his rise from the modest streets of Van Nuys, California, to the top of BlackRock is nothing short of inspirational. Larry's academic journey took him from UCLA, where he bagged a BA in political science in 1973, to an MBA in real estate from the highly regarded UCLA Anderson Graduate School of Management in 1976. These academic achievements laid a solid foundation for a career destined to leave a mark in the world of investments. But Larry's path wasn't without its bumps. While at First Boston, a notable investment bank in New York, he faced a significant hurdle in 1986 when his department lost a whopping $100 million. Larry, along with his team at the company, found themselves venturing deeper into the world of high-risk financial maneuvers, lacking the necessary technology to effectively manage these risks. It was during the second quarter of 1986 that the reality of their situation hit hard. Due to a miscalculation Larry made regarding interest rates, the company faced a severe setback, losing $1 million. This moment, as challenging as it was, became a turning point. It served as a vivid demonstration of the financial market's unpredictable nature and ignited in Larry a firm resolve. He was determined to establish a company that wouldn't just participate in the financial world, but one that would emphasize the importance of thorough risk management in every aspect of its investment strategies. This experience, though a tough lesson, laid the groundwork for what would become the cornerstone of his future endeavors. By 1991, BlackRock was on a roll, with its assets under management ballooning to a whopping $9 billion. This was clear evidence of their cutting-edge strategies and focus on client needs. But this was just the tip of the iceberg. In the next few years, BlackRock's growth went through the roof. By 1992, they were managing $17 billion, and in just 2 more years, that number skyrocketed to $53 billion. This explosive growth caught everyone's attention and paved the way for an even bigger leap. In 1995, PNC Financial Services Group's acquisition of a stake in BlackRock Financial Management for $240 million marked a significant turning point for BlackRock, expanding its client base and blending institutional and retail services. Despite challenges like the Peabody bankruptcy, BlackRock demonstrated resilience, notably managing GE's $77 billion portfolio. The late 90s saw BlackRock's successful public offering, signaling strong growth and trust in the company. Entering the 2000s, BlackRock continued to innovate, notably launching BlackRock Solutions under Charles H.C.K's leadership, solidifying its position in the financial technology sector. Meanwhile, 2009 was a year to remember. BlackRock clinched the title of the world's largest asset manager, a testament to their global impact. This wasn't just about the numbers, it was the fruit of years of hard work and the drive to reshape the financial industry. The following years were all about strategic moves like snapping up State Street Research and Management and merging with Merrill's investment manager division. These weren't just expansions, they were about bringing in fresh talent and expertise. BlackRock's growth continued, with their iShares business becoming a major player. Their commitment to environmental, social, and governance issues, or ESG issues, set them apart as pioneers in responsible investing. By the end of 2022, they were managing a mind-blowing $8.59 trillion. Then there's the story of the 2008 financial crisis. This was a time of intense upheaval and uncertainty, a real test for the financial world. In the midst of this chaos, BlackRock's story took a dramatic turn, setting the stage for them to become a financial behemoth. Meanwhile, Barclays, with its rich history, was at a crossroads. The crisis had hit hard, and they needed a strategy to come back stronger. This was a pivotal moment not just for Barclays, but for the entire financial landscape. In a move that would make waves in the financial world, Barclays decided to sell its global investors unit, a decision that would later be hailed as a stroke of genius. This unit wasn't just any collection of assets. It included iShares, a titan in the realm of exchange-traded funds or ETFs. At this pivotal moment, BlackRock, already a star in the financial sky, stepped in with its sky-high ambitions. The deal, sealed in February 2010, was no small affair. Barclays handed over its global investors unit, including the prized iShares, to BlackRock for a jaw-dropping $13.5 billion. This wasn't just a simple trade of assets, it was a move that would forever alter the landscape of finance. BlackRock was now not just acquiring a set of assets, but embracing the burgeoning world of ETFs, a sector that was set to revolutionize investment strategies. With the ink dry on this historic agreement, BlackRock found itself holding a game-changer, iShares. This acquisition wasn't about adding another business to its portfolio. It was about diving into the world of ETFs, which brought together the best aspects of stocks and mutual funds. With iShares in its arsenal, BlackRock was now a major player in the ETF market, reshaping how people invested their money. BlackRock's rise to the top continued at full throttle. With a vast fortune under its management, the company now orchestrates a global financial symphony. Its business model caters to a diverse range of clients, operating in over 30 countries and serving customers in more than 100. The BlackRock brand stands as a beacon of trust and excellence in asset management, harmonizing investments across equities, bonds, options, and more. During the COVID-19 pandemic, BlackRock played a crucial role in stabilizing the financial markets by managing two significant corporate bond buying programs for the Federal Reserve, demonstrating their strategic importance in global finance. Concurrently, BlackRock expanded its global reach by becoming the first global asset manager approved by the China Securities Regulatory Commission, indicating a strategic shift in their investment focus from India to China. This adaptability and expansion are not without controversy. However, as BlackRock, a major player in finance, continues to attract both intrigue and debate due to its immense influence and power. Ralph Schlosstein, a founding member of BlackRock, described it in 2010 as the world's most influential financial institution, with assets exceeding the GDPs of many nations, earning it the nickname of the largest shadow bank. This immense power and influence brought BlackRock under intense scrutiny, especially in 2020 when US lawmakers proposed a bill to regulate it and similar entities. BlackRock's significant stake in numerous publicly traded companies further amplifies its impact, making it a key player in influencing market dynamics and industries worldwide. BlackRock's position as a top shareholder in some of the world's biggest corporations, while impressive, also raises eyebrows. Concerns about anti-competitive behavior emerge when it holds significant stakes in rival companies. Critics argue that this could skew market dynamics and stifle competition. BlackRock, however, insists on maintaining a strict firewall between these companies to prevent collusion. While some remain skeptical, the fact that regulators haven't stepped in against BlackRock suggests they might be sticking to their word. Navigating this complex terrain, BlackRock must balance two critical roles. On one side, it's tasked with generating returns for its clients who own the assets it manages. On the other, it shoulders ethical and fiduciary duties as the custodian of these assets. This delicate dance between profit-making and ethical responsibility is central to BlackRock's operation. A major point of contention is BlackRock's role in voting on shareholder matters. Critics question whether BlackRock always acts in the best interests of its clients or follows its own agenda. Despite these concerns, BlackRock counters by saying that it always puts its clients' interests first, as they are the true owners of the shares. In addressing these critiques, BlackRock underlines its commitment to its clients, assuring that their interests guide its decisions. But the ongoing debate sheds light on the need for more transparency and a better balance between market influence and fiduciary duty. It raises the question, is it time to rethink the choreography of financial stewardship? BlackRock's role on the financial world is like leading a dance, a complex interplay of power and influence. But the spotlight isn't just on their financial moves, it's also on their environmental footprint. BlackRock, with its significant investments in coal and fossil fuels, has faced sharp criticism for contributing to environmental harm. Accusations of being a major driver of climate destruction underscore the impact of its investment choices. BlackRock is transitioning towards environmentally sustainable investments, moving away from coal and embracing environmental, social, and corporate governance, or ESG investing. Despite these efforts, there is skepticism about the depth and sincerity of their commitment to ESG, particularly regarding their approach to climate risk disclosure. Since 2017, BlackRock has broadened its focus to include environmental and social issues, actively engaging with companies on sustainable practices and accountability. This shift has been met with mixed reactions, balancing progress with public perception as the company navigates its influential role as a major shareholder in promoting ESG values. But the controversies surrounding BlackRock don't end with environmental issues. Its global expansion, particularly into China, is a testament to its ambitions but also raises questions. BlackRock's entry into China as the first foreign firm to fully own a mutual fund business opens new doors but also invites scrutiny. This move into the Chinese market raises questions about the company's motivations and its role in global power dynamics. BlackRock's connections with governments and political figures are another area of debate. Allegations of profiting from reconstruction efforts in Ukraine and accusations of close ties with central banks fuel discussions about the company's influence extending beyond mere finance. These controversies paint a picture of a financial giant navigating a complex world, where every step in the dance of finance and power is closely watched and often debated. That's a wrap on our deep dive into BlackRock, a colossal entity in the finance world with a story as rich and complex as its balance sheet. This giant's journey from shaping global markets to facing both acclaim and criticism for its ESG strategies shows how influential it truly is. Remember, with great power comes great scrutiny, and BlackRock's tale is a testament to that. If you're intrigued by financial titans, why not check out our next video to discover the earlier masters of global finance? Before you go, show us some love with a like and subscribe to Luxo-Life for more insights into the movers and shakers of the world. Click on the suggested video and keep exploring the fascinating world of finance. Thanks again for joining us today, and we'll see you next time.